Right, well, data this morning showed inflation decelerated in March, but still remains high. And for the first time in 18 months, the annual increase in prices for food away from home topped inflation at retail food outlets. Prices at restaurants and workplace cafeterias rose 0.6% on the month. That's according to BLS. And this comes as a new report from William Blair shows that on average, consumers spent $188 at restaurants this month. For more on this report and dining trends, let's welcome in Sharon Zackfia, William Blair Equity Research Group Head of the Consumer Sector. Thank you for joining me this morning. So talk about some of the nuances that you're seeing in restaurant spending.
Sure. Well, so I think what we're seeing in restaurant spending is more typical seasonality, which we really haven't seen since 2018 and 2019. This is really the first year where we're kind of in a pandemic normal world. So when we look at restaurant sales and we see this deceleration in the March quarter versus December, that would harken back to normal seasonality, where consumers tend to spend a lot more during the holiday season. But then you see this ebbing off where the winter takes hold and people kind of sequester a little bit more and nest in their homes. So I think we're seeing very normal patterns. And when we look and we ask about year over year trends, we're actually seeing some encouraging patterns where consumers are basically saying they're eating out a little bit more in March year over year than they were in December. So it feels pretty good right now in the restaurant space as it relates to resiliency in the face of a lot of, macro headwinds and so on.
I mean, and I know that when we were coming off the back of the pandemic and people could finally get out and spend it, be in restaurants, we thought that a lot of the trends that we'd gotten used to, sort of just doing takeout or delivery, would sort of fall to the wayside. But some of the data showing that people are still taking out more than they are eating at restaurants. Talk about that trend and why that's still happening.
Yeah, it's really interesting. I think what we're seeing in the restaurants mirrors a lot of what we've seen in retail over the last 20 years, where convenience has become much more important. You can definitely see that in retail with the advent of e-commerce and the rise there. And consumers are very used to convenience now being part of the value equation. And that takes many forms. It takes the form of delivery. It's more, I think, taking the form of what I call order ahead and pick up in store. And that's good for restaurants because that tends to be one of the highest margin channels in the restaurant space. So the more that, any of these restaurants can get you to order ahead and just come pick it up, that's a natural tailwind in the restaurant P&L.
And on the screen there, we have the Yahoo Finance poll that showed what people were cutting back on because of inflation, and eating out topped that list, very closely followed by shopping. Is that a trend you expect to continue? Is this going to be the new normal where we do see people cut back more on eating out for the longer term?
So it's interesting. Whenever we do a survey and ask, what are you going to cut back on? Eating out almost always tops the list. And then we see the results come in and they're very resilient from the restaurants. And I think, frankly, eating out is not necessarily as planned of a purchase as certainly buying a car or buying furniture or even buying clothes. And people are going to make decisions multiple times a day about what they're going to eat and how they're going to get that food. And it's a real-time barometer of consumer confidence. I think people actually know with their stomachs, sometimes better than their heads, how they're feeling. And it's very encouraging, even in early results for the March quarter, that we're seeing kind of continued resiliency in how consumers are treating this eating out occasion. Also, don't forget, consumer mobility is very important here. So there's almost a natural hedge to some extent as more employers require their employees to come back into the office. That's a tailwind of the lunch business. So, I know there's a lot of concern, but there's still very resilient trends that we're seeing, and I think a lot of momentum in the restaurant space.
And we did see some restaurants raising prices, others vowing not to raise prices. But as you look at the picture, and especially based on the survey, who do you see as the restaurants that are really the big winners based on the research that you're seeing?
Yeah, I think there are some that you would expect, like a Kura Sushi, which, on average, they've got this great tech-enabled format. They're able to reinvest that into lower price points that are kind of half of what their peers are at, and they certainly see the traffic advantage there. They've just had a quarter that they reported that was very healthy. But one of the most reassuring data points we saw in our survey was with Chipotle, Chipotle is a concept that's taken a lot of price over the last 2 years. They've seen their restaurant level margins go up over the last 2 years. They talk about their value proposition still being very good and solid. And it's great to see in a survey like this, Chipotle be in the top 5 in terms of perceived value. That gives me more confidence in their ability to continue to sustain traffic gains, even with all of the price that they've taken.
Certainly an interesting picture as we see these shifting dynamics and keep entering into new phases of the new normal when it comes to restaurants. A big thank you for your insights, Sharon Zackfia, William Blair Equity Research Group Head of Consumer Sector. Thank you so much.